Okay, hello and welcome to this webinar, which basically we'll be talking about Fibonacci and Fibonacci levels and how to use it in technical analysis. It's going to be a little bit maybe for beginners, but at the same time we will be talking about like how to use different ways and different methods, and which basically it's still for Fibonacci, but the way that we use it is a little bit maybe sometimes people would find it a little bit new. Um, Unfortunately, because we are like in a very short period of time, which is like only 1 hour, we will talk about Fibonacci levels and uh, what are they, how did they even like come to Fibonacci's mind, who's Fibonacci, and how to implement them on in the market. And at the same time, we will add something which is like how to use Fibonacci with trend lines. Uh, have you ever heard about Fibonacci and the trend lines and how to use Fibonacci levels with the trend lines? Okay, no, fine. So we'll leave this thing until the end, but let's start with the basics. And here I'm talking about like the very basics. Okay, so first of all, who is Fibonacci? Everybody talks about Fibonacci, and everybody actually knows him like from trading uh, the trading platforms, and that you need to that it's easy to be troll, and it can help you in your trading. This is actually true, but at the same time, I still believe like traders and beginners sometimes like needs to know about like how did it come, like what are they, what are the values, what are actually the ratios, and how did he was able like to come up with, and why did it happen. So first of all, his name is Leonardo Fibonacci, and he's not like a famous chef actually, but he is a famous Italian mathematician. Um, he was dealing with mathematics and a little bit, well, you can say he's like a genius, and or maybe a little bit. Some people thought that he's a little bit psychic, but I don't think so, because his his ratio actually works again and again and again. Depends on the cycle, of course, that you implement on the chart. So he's also known as a super duper uber ultra geek. That sounds a little bit too much, but never mind. Yes, so he is actually again another famous Italian guy who loved mathematics, and also known as a super duper uber ultra geek. He had some sort of like, let's say, like an aha moment when he actually discovered a symbol or simple series of number that created ratio describing the natural proportion of things in the universe. Um, I'm sure like some of you like also heard about some guy. His name is William Gann. Have you anyone heard about him? It's actually also his indicators are on the trading platforms usually. Some of the trading platforms, not all of them, but uh, there is some sort of like people who, yes, William Gann, Gann, that's right. So some of there were like a lot of people who basically believes that some sort of that the market is basically built on all about mathematics, and at the same time there is some people who use astrology in also predicting the market. Sometimes we can say that it's right, sometimes we said it's not really, but at the same time it's all about the numbers, and definitely it's all about the numbers. But uh, just like I said, a simple series of numbers that created ratios describing the natural proportion of things in the universe. So first of all, the ratios rise from the following number, or the number of series, which is like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and 144. So if you look at the numbers, it's kind of like a very random number, but it's actually pretty easy to be calculated. I don't know how he basically came up with these kind of number, like what's the series of why he did it, and this way nobody actually knows. But this series again of numbers is derived by the starting with with 0, okay, which you might say it's the starting point of the cycle, okay, followed by 1, and then adding 0 plus 1 to get 1. It is a little bit confusing, but it's not going to help you any way in your trading, the method and how they calculate it, but I believe that you still need to know how he got it. So the third number, where is it? So this series of number is derived by starting with 0 followed by 1 and then adding 0 plus 1 to get 1, the third number. Then adding the second and the third number, which is 1 plus 1, to get the 2. To get the 2, the fourth number, and so on. Is this kind of clear? I know it's a little bit confusing. I might say it's a little bit confusing, but is it a little bit clear at least? So it's actually 0 plus 1 equals 1, and then 0 plus 1 plus 1 equals 2, 0 plus 1 plus 1 plus 2 equals 3, and so on. Okay? So after the first few numbers in the sequence, if you measure the ratio of any number to the succeeding higher number, you would get 60, or spot 61.8 we call it, but you'll get 0.618. For example, if you divided like the 34 divided by the 55 in the sequence, it will also be equal 618, 0.618. Okay? If you measure the ratio also between the alternate numbers, which basically you get 0.382. Another example, 34 divided by 89 equals 0.382. And that's as far as into the explanation as we'll go. Okay? Is that a little bit clear so far for you guys? Okay, sounds good. Fine. Let's go into the next one. As water. Oh, that's good. That's good to hear. It depends if it's like a clear water or shallow water, but I like that. Okay, so continuing with another slide. So these ratios are also called the golden mean. That's a little bit of a mumbo jumbo, I would say, but with all those numbers, you actually could put an elephant to sleep. Let's bring it that way. I don't know if this is like actually true a little bit, but let's put it that way. Just cut to the chase and let's have a look at exactly what the numbers that you need to know and how it might actually get you into trading. So we have two things that we use from Fibonacci. There is something called the Fibonacci retracement levels, and there's something else which is the Fibonacci extension levels, which means sometimes, I don't know if you're like, let's say if you're a beginner, or even like if you follow the market on a daily basis, or if you're a part-time trader, sometimes you'll hear on the news that you know, there is one of the stocks or one of the currencies are actually, there is an extended trend or an extended wave or an extended move. Especially, let's say sometimes when there's, just like right now, let's say when you have the U.S. stock market is at record high, where would be the next resistance levels? Actually, nobody knows. But since this wave is extended, because it's at record high and there's no other levels that we know on the chart, that it might stop at somewhere like resistance level, we use the extension. Is that clear? But the retracement level, it's actually pretty clear to be done, and I'll show you right now how it will be. Okay. Next one. So first of all, like the easiest way to know like about Fibonacci and how to use the Fibonacci retracement to enter a trade. Usually this is when I trade the currency market. I trade most of the market, but most of the time I trade the U.S. stock market. But in terms of the FX, which is like my morning let's say full-time job as a trader in the market, when I use it for both stocks and currencies. But in currencies, yeah, more often. But at the same time, so in the morning I would do trade currencies, and then in the evening, or based on like where the time zone, which is basically I'm in Abu Dhabi in the UAE, so I can get the European session, a little bit of the Asian session, and also the US session. So we use it. So the first thing you should also know about the Fibonacci tool is that it works best when the Forex market, which is the FX, which is the currencies market, is trending. It is always when the market, it always actually works when the market is trending. Means whether if it's an uptrend or a downtrend, not on the 1 minute chart. No, we're talking about, we'll look at the major outlook first. We look at the bigger picture first before we implement the Fibonacci level retracement to decide whether we're gonna be buying or let's say or selling. Okay, so the idea is to go long or buy on a retracement at Fibonacci support level when the market is trending up, and to go short the other way around on a retracement at Fibonacci resistance level, which is a retracement level, when the market is trending down. In theory, is this clear? Perfect. Okay. I can see a lot of yeses. Yeah. Oh, fine. The next one. Finding Fibonacci retracement levels, which is actually pretty easy. But in order to find these Fibonacci retracement level, you have to find the recent significant swing highs and swing lows. And this is what I say, or why I said that it needs to be a trending market. A trending market, and it's not only just a 1 minute chart that goes up like for, let's say, 30 pips and then you take the retracement. It's different. But when it's a trending market, it's always better to, it works better when it's a trending market. Okay? About the swing high and the swing lows, you're not going to understand it quickly, but you'll understand when I show it to you on the charts. Okay? Then, for the downtrend, you would do click on the swing high and drag the cursor all the way to the most recent swing low. That's again in theory. You'll understand it later. Okay? But for uptrends, you'll have to do the opposite. So if the market is going up and you start seeing the market going down for retracement, you'll drag it, you'll string it from low all the way to the most recent highs, and then you will get the levels, or you'll get retracement levels. Okay, so because this is in theory and this is written, it's not going to be as clear, but now I'm going to show you some charts that we can look at. So let's say this is the Aussie dollar on the daily chart. Okay, and then here we're talking about from the 20th of April all the way to the 30th of June. That's a trending market. This is how we know that it's a trending market. That basically it's been trending for more than for almost like 3 months. So that would be the best way, like, to look for the major cycle, the major changes, or the major cycle where the retracement might occur. Okay, so since it's a trending market all the way going up, you will since you'll be looking for retracement lower after this on the daily chart. If you look at this candle on many of the patterns or many of the websites or many of the trading courses, this is a bearish candle after 1, 2, 3, 4 days of gains. So this might be the time where, or a confirmation for another leg lower for retracement. And here we will be looking to buy, but we buy only on these levels, or to choose one of these levels. The levels that we're talking about we're talking about these levels. We're talking about the 23.6, 38.2, the 50%, 61.8, 76.4. Okay, so what are these levels? This is the wave that we're talking about. We're talking about the lows here, this low to this high. That's the wave. This is the whole wave. And 0.23 represents, which means that the price already retraced by 0.23% of the recent rally, from the 20th all the way to the top. Is that clear so far? Okay, good to know. Fine. The 38.2 is also 38% of the recent swing, all the way to 74.6. One of the things that you always also need to make sure about it, that you need to use the stop loss. But the question is, when you will start to buy, and at the same time, where would be your stop loss? That will be always the case. Like you always need to put your risk and to know how much you can risk before going into any trade. So when you're putting a trade, okay, if we're gonna buy, let's say Aussie, where shall we put the stop? For me, I would always recommend that to average your position, but slowly in like tranches. So let's say a 1 minute lot at the 79.55, 1 minute, let's say if it goes all the way down to 77.64 and so on, my stop would be below the 76.4, or if I'm a kind of like a swing trader, and here we're talking about swing trading, okay, if I'm a swing trader, I would put it below the recent lows, below the swing low, because if it goes all the way back here, it means that the cycle is wrong, or it means that the trend is basically changing. Sounds good so far? Okay, good to hear. Fine. So going to the next level. So what happened here, it's the same chart, but it's actually extended. So we had the April 20th low all the way to the top, and then we took the retracement level. That's the 23, the 38, and the 50. Okay? If you look at the chart here, so it went all the way down to 26 and then went all the way back up. Let's assume that you had let's assume that you have actually here a long position, okay? And it went back up, or it went back up from here. It's all up to you. It's all up to you whether you close, because we're talking about daily chart here. So if you waited for like 1 day, 2 day, 3 days, and then the 4th day, 5th day, 6th day, here you had like already above, like you're almost above like a 100 pips. It's up to you whether you want to close, or you want to keep it, or you want to swing it more. We don't know. Okay, that's all up to you. Please explain one more time. Explain one more time. The previous one. Is that Ortis, I guess? Okay, yeah, okay. So I'll go back to the previous one quickly. So as I said, when you want to draw it, you look first at the trending market. Since that the Aussie dollar has been trending since April 20th, all the way to the top in June, that's a trending market. It's positive. The Aussie has been going like up for more than 1,000 pips. So here what I do is like, okay, so after 1 day of we can say that this is a bearish engulfing candle or a bearish candle on the daily chart. This means that the price is likely to start trending lower, not a change in the trend. Here it's just a retracement. Take a small breath, take a little bit of time before the upside trend continues. But here I would be, as a trader, to look for, okay, fine, I'm going to wait for the retracement, but where shall I buy? I would be looking to buy on these levels. Yes, they are like they're like long levels and like far away from each other, but whether you start from the 38 or you start from 50, or from the 50% or the 61%, but the most important thing is basically your stop. Your stop should be actually in the system before even you take profit. That's what I do. Okay, so my stop would be here even if it goes all the way down, and we're talking about swing trading here. Okay, so even if it went all the way down, my stop should be below the 100, which is the recent lows of the same way. Because if it goes back all the way down here, this means that the cycle is wrong, or this means that basically the Aussie is changing the trend from an uptrend into a downtrend. It's not a retracement anymore. Okay, I hope this is clear. If not, you'll find the recording, and I'll show you again on the charts in a little bit. Okay, I got it now. Okay, that's good. Good to hear. Okay, so again, the same chart. So it went all the way back up again, as I said, and then a retracement all the way down, 23.6, and then up, and then it trended all the way back down. So first of all, there's no a break above the recent highs, despite the fact that it's like 100 pip, if not more than 100 pip, actually more than 200 pips. It's up to you whether you want to close it in here or close it in here. It's all up to you. For me, the FX market is always like hit and run. I would love to, what I love to do in the forex market is to hit and run. Means like I try like to, whether you're gonna call it scalping, or I do a little bit of swing trading, but most of the swing trading that I do is like, we're talking about like 3, 4, 5 weeks sometimes, and months when it comes to gold and silver, or like some assets. Okay, but here, so it continues all the way back down. So it retraced by 23, kept going up and down, but we haven't actually broke above the recent high, which means that the retracement remains ongoing. Unless if we break above the recent highs, that would be okay. The retracement is done, so the trend continues. So this is what happened here. So where would I put my entry point? I'll tell you now. So whether you start, for me, I always like try to buy between the 50 and the 60. The 50 and the 60. So whether if it's a 76.9 or 74.5. That's always my entry point, whether it's a 50 or 61. But here in the example, it's just to show you that it not only those two that actually works, but most of the ratio actually works. Here on this day, the second day, it went all the way back to 79.55, and then we already closed above the 80. So that's a 50 pip. Okay, so that's pretty important too. So the entry would be, let's say, starting from 38.2. If you are a swing trader, you can start with a 1 minute lot, let's say 77.64, another 50, another one lot, let's say 76.90, if it goes down. Okay, and then the retracement continues all the way back up, and it accelerated, if you look at it, when it actually broke above the recent highs. Here I would know that, okay, listen, well, we're breaking above the previous top. This means that the trend will continue, and actually continue more than 500 pips toward 85. Okay, is this does this make sense so far? Okay, a lot of yeses, yes. Okay, fine. Okay, that's good. Let's go into the next one. The downtrend one, which is pretty the same, but the other way around. But then I'll take you to show you some charts to look at the market today, what happened, and what would be actually what it look like. Okay, the downtrend. So we had a downtrend in here, and then it actually retraced a little bit, and then it continued all the way down. Okay, here we have a 4 hours chart on the euro dollar, but at the same time here, like we had also, we can take it like, okay, hold on, there's a question, Alberto. Question: will you provide the file you're using right now? Yeah, definitely. Yeah, I'll send the we will provide the whole thing, the video and the presentation. Sorry, I'm struggling a little bit. Okay, so going down all the way a little bit up, and then all the way down, and then we started to see some sort of a retracement here, and some sort of like a support area for like few days, 1, 2, 3, 4, and then starting edging higher. And at the same time, there's like a formation of what we said, like lower highs, higher lows and higher highs. Means that this day, if you look at this one, the low here and the high, and then this day here, the high is higher than the one before, and the low is higher than the previous day. The same thing, the low is higher than the previous low, the low is previous. So this is this one would be even one of the things to look at, that okay, we're tracing my okra because there must be like traders, or like traders in the market are pushing the lows for 3 days in a row. That will be a very good indication for another retracement to the upside, especially after like more than I don't know how many hours, how many days of this, but I guess so, like more than, we're talking about like kind of like a 5 days. Okay, so 5 days swing lower, I guess well, should be like the time for retracement to the upside a little bit. Okay, with the candlesticks showing us some sort of a support here, I will be looking to draw the Fibonacci retracement. So from the swing high all the way to swing low, and then you will get the numbers. And it's pretty easy because on the trading platform, it's pretty easy when you just when you draw it. And I'll show it to you just in a bit. Okay, the 23.6 would be one of the potential shorts. 23.8 potential short. 140. That would be my ideal potential short, which is 140 or 140.64. I would be interested to short those two. At the same time, since it's 4 hours, there is still also a good opportunity to even to short at 139. So if we let's assume that we did actually short like 139.83 for like 1 mini lot, which is like nothing, $1 per pip, 140 and 146, and my stop would be above the previous high, and then the my target would be below the 138.50. And if you calculate them, that's more than 200 and something pips all the way down, because I'm holding, let's say not 1 minute lot, let's say half a minute lot. Okay, that's on the downside. So this is what happened. It continues all the way down again. That's the swing. That's the one that we talked about it. This is how we draw it, and then it went all the way out. The first day here, let's say the first test of the 23.6, the first test, it was at 39.33, and then it went all the way down even below the 39, which means we're talking about like 30 pips to 50 pips once it actually touched it. Okay, the Fibonacci levels, what I like to say, or what I like to call it, is the levels of action. The 50 and the 61.8, I would call them the levels of action, or maybe I would call 50 the level. The 50% is the level of action, and I would call the 61.8 is actually known as the golden ratio. It's called the golden ratio. Oh yeah, it's going up. Okay. Sorry, the golden ratio. So it continued all the way back, all the way up to 38.2, the first touch, and then we actually closed the day below it, or the 4 hour. It continues to the 50%, and then it was actually just a smooth touch, 140.23, above it like maybe 5-10 pips, and then all the way down. My stop would be above, again, as I said, first stop would be 76.4, or even above the 100%, and my target would be another leg lower below the latest, or the recent lows. Is that actually is that clear so far for you guys? Okay, let me try and bring up the bring up some charts in here, and let's try it. Have you ever tried the MetaTrader before? Okay, hold on. Check. Can you see that one? Yeah. Okay, that's good. Fine. So so I guess everybody's familiar with MetaTrader, right? Or with the trading platform. Okay, fine. So let's have a look at random. Let's have a look at your USD, let's say, or let's have a look at anything else, whatever. So let's look at 4 hours, and we can put the daily chart. Yeah, the daily chart. Okay, let's look at the daily chart because it's trending. Okay, so as an example, is the mouse? Can you see my mouse, by the way? Okay, yeah. I remember there was like a dashboard or like a drawing tool. This. I don't know. I remember that was supposed to be like something to draw. Like, not sure if it's still there. Okay. Anyhow. Okay. At least you can see the cursor. Okay, that's fine. So, looking in December 2016, the euro started trending higher. Okay, from December of 2016, the euro low was around 103.38, and it continues all the way back up, all the way to 108. Okay. Yeah. So we were in a downtrend, 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 and then we started like trending higher. Okay, after like significant amount, like we were talking about 1 year of declining, we started like trending higher, and this is the daily chart. Okay, so the first thing after I started like seeing, first of all, what do we call it? The reversal candle here, which is the uh, uh, bear shooting star. I started seeing some sort of a decline. I would be interested to start in implementing the Fibonacci retracement on it. So how do you get the Fibonacci? It's actually insert Fibonacci retracement. That's all. Now, when we said, since it's trending higher, how am I supposed to do it? Is it from high to low or from low to high? Sorry about the sound. How do I take out the notification? Low to high. Yo, that's great. That's actually right. Low to high. I don't know how to get rid of the sound, but I'm gonna just mute the speakers. Okay, good. From low to high. So this is the low, and this is the high. Sorry, it's actually in black. I'm gonna fix it. Let's make it. There you go. And let's draw it again. Right, Fibonacci from the lows of the cycle all the way to the highs. What happened? It went all the way first. Let's look here. It went all the way first here. That's the first day. It went to 107.11. Okay? 107.11. From it, it went all the way back. 107.11 to the highs of the day. 108.28. That's more than 100 pips. It continues all the way back down. The first touch here. Can you see this one? It goes all the way to 38.2. The first touch was at 106.64. 106? No, sorry, 106.40. Okay? It touched it just a little bit, like it's actually at the day's low. And then from 106.40, it went all the way to the highs of the day, 107.9. 107.09. That's almost another 100 pips. Okay? It continues all the way back down, and then here, look what happened a little bit. It's not always the same, but it helps. So we actually tested, went all the way up during the day from 105.85 to 106.32. That's almost like 60 pips. And then it closed the day lower. But look what happened exactly. And again, remember what I said about the 50 and this, where are the shapes? My ideal buy would be, again, between the 50 and the 60% retracement. That's the 50 here, and that's the 60 here. Look what happened. First touch on the 61.8, that's the golden ratio, and the 50% is the level of action. Look what happened here. So that's the 61.8. Let's assume that you actually executed, sorry, let's assume that you executed a buy or a long at 105.27, okay? And your stop should be around the lows here, okay, which is 103. We're talking about swing trading here, okay? But look, where did it go? The low, where was that? It was 104.93. So we're talking about like almost 30 pips from 105.27 to 104.93, okay? And then it kept trading around like up and down, but we're talking about 105 to 106, 107. That's actually very good, 200 pips. Oh, excuse me. Yes, I'm back. And then the breakout. The breakout all the way back up to where? To 108. 108, where is it? Let's have a look. Yeah, actually all the way. 109.05. So if you actually started buying at around the 105 and the 61.8, which is 105.27, and you closed all the way to the top, let's say, because your target should be the previous top, we're talking about not less than 350, 400 pips. Is that clear in terms of the uptrend? Okay. At the same time, let me just look at it again, but in a different way. So let's assume we went all the way down and then all the way back up, right? And then we started seeing some sort of a decline, right? That's actually going to take us into our next thing, which is using trend lines. But let me just try this first, and then we'll see what happens. Also, this is in, I don't know why it's in black. Let's put it in red. That's a trend line, a normal one. Where is it going? The 7-4 is not in here. Okay, I'll show you this a little bit later. But that's on the upside. On the downside, let's have a look on the downside. What do we have? UDSD, let's say. That's actually possible around, yeah, there you go. So we're trending higher, and then it started to collapse. And if we took, it's a little bit like very, very huge swing, but we're still going to take it. Look what happened here. Trending higher all the way up, 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 up. That's a daily chart again. And the LZ went all the way back down. 38 is always, again, like one of the levels to watch. And then it spiked all the way back up. But the most important thing here is like we haven't broken above the previous top. That's one of the major things that, okay, that might be a failure. That might be a failure. But still, look at what happened a few days ago. It went all the way to the 60, first of all, the 50% retracement. And it actually went all the way up from the 50, here, where is it? Oh, let's talk about the down. Anyway, 74.50 all the way to 75. That's another like almost a 100 pips. So try as much as possible to keep an eye on the 50 and the 61.8, and it's pretty important, just like what happened also just a few days ago. It was on Monday, Tuesday, Wednesday, Thursday, yes. On Monday, first touch of the 61.8 and then all the way back up. Okay, on the downtrend, let's see something else. Let's see GBP USD. Okay, on the downtrend, have a look at this one here. Trending lower, that's the high. That's the flash crash lows. There's actually some talks about it, but still a good thing. So on a downtrend, is it from up to down or from high to low or low to high? High to low or low to high? Okay, high to low. Okay, that's true. Low to the high to low, sorry. Okay, what happened? Look, all the way back down, and then it started to go up, 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 up. And here, that's my ultimate, where's the shapes? The 50 and the 61.8 is my idle short level, short area. Have a look. What happened in here? It was, the 61.8 was at 27.16. It went all the way up to, what was it? Sorry, how much is that? 27.16, all the way up to 27.80. So that's like a move of 60 pips. But then what happened? From 27.70s all the way back to 120. That's 1 to 19 also. That's a 700 pips. That's what I like about swing trading and using Fibonacci with it. Okay, is that true so far? Apologize, sorry. Okay, fine. Let's talk about the last thing here. Next one. Support and resistance with Fibonacci. With Fibonacci means support and resistance. Forget about trend lines right now, but support and resistance. I hope that we have some time. Okay, so just like normal, a strong uptrend trending higher, and then it started like to see a reversal candle here. So we will be assuming that it will be another retracement to the downside. That's normal. At the same time, we have the same levels: 23.6, 38.2, 50, 61, and 76. Okay. What happened when the price gets to 0 or 100? It depends. So let's say, in this case, if we are waiting to go long, if we're looking to go long at 50 or 61.8, if it goes all the way back here, this should be your stop loss. This means that the cycle is wrong. You're no longer looking for retracement. This would be a change in the trend, because the trend needs to stay above the previous lows. Okay, and if it goes all the way from the 50 all the way up, this means that you have to keep driving the wave. Keep driving the wave. Okay, so 38, 50, and 61, and as I said before, like my ideal like entry point is the 50 and the 61 point. What's important is if you have a confluence, which is the same chart, you had a resistance turned into a support. A resistance here, and then it went all the way back down, and then a breakout. Since there is a resistance, at the same time, it's confluenced with the 50%, Fibonacci. What do you think is going to happen here? What do you think is going to happen? Trend up. Price go back. If it breaks, it will go up. The 50 should become support. Yes, that's true. But the thing is, when there's a confluence between like two analyses, we're talking about resistance and the 50% Fibonacci, that would be another like spot on long when it comes to long positions. There you go. The same level, the 50% all the way down, but we haven't actually broken below that level, and it continued trending all the way back up. Eventually price broke through the former highs and continued trending down. So when there's a confluence, when you'll have like the 50% retracement with the former resistance or with the former support area or former resistance and turned into support, that would be one of your best what do you call it, one of your best patterns maybe. Can you tell us when exactly to sell in this example? So it's the same. When to buy, as I said, it's between the 50 and 61. But with this one in here, as I said, there's an area. It's always an area. You can't get just only one level to say I'm gonna buy it on 1 point something, and if it's not gonna be there, I'm not gonna buy it again. No, it's an area. It's always an area. It's like a support area. It's not even a support level. It's always called a support area or a resistance area where buyers and sellers are there. So here, since this was a resistance, and then the price went all the way back down and then broke above it. Now this has turned into a support, right? And the confirmation of the support was here. At the same time, there are three testing the 50. Yeah, well, it's still, even though your stop, again, as I said, your stop should be below the 76.4 or below this one. So even if it tested 3 times, as long as your stop is still there, you shouldn't be worried, because your stop is not hit yet. Got it? And it continues all the way back up. So when you have a confluence, that would be pretty good. The last thing that we will be talking about it just pretty quickly is the I actually because we don't have that much time, is actually how to use Fibonacci retracement with trend lines. And unfortunately, I don't think so that I'll have the time to show you it because I needed to look at the charts anyway. But it's just like I think about the length of the time to wait for the soil. It's still, well, patience is key in this market. You have two things. Rule number one, and I will write it to you guys. That's my rules. Rule number one, cut losses quickly. That's rule number one. Do you know what's rule number two? Anybody knows what's rule number two? Let the profit run. No. Rule number two, don't forget rule number one. Now, yeah. Rule number three, don't forget your stop. And at the same time, you can let your profit run as long as you can move your stop to your break even. As long as you can move your stop to your break even. Rule number three, don't forget them all. That's right. That's actually good. That's actually a good one. Okay. So, and patience is very good. Patience is very good. As long as you know your levels, you know your risk, you know where you think the market is going to go, or the level that you would like to see, there's no worries about it. Okay? So, rising trend, just like the confluence, the one that we talked about in the resistance and support and resistance area, here we're going to talk about the rising trend lines of the same, rising or even declining trend lines. But another confluence that you can use it with Fibonacci. So, a strong uptrend, and then it starts trending lower. Here you'll have to use the Fibonacci retracement. The low, the high starts to trend lower. 50 and 61% is actually within the same area. Again, it's an area, it's not a level, it's an area. Between the 50 and the 61%, that's the support area here, including an uptrend line, including the 61.8, and it does actually include also the 50% Fibonacci. When you have those three levels of the three levels of the same area, that would be another reason for you to start even buying again once again. To start buying once again. Okay? What happened to this chart? This is actually what happened. It was within the same area, 50, 61.8%. So trend line plus 61% Fibonacci level held, and then it breaks all the way back up. Price broke through the previous swing high. Look at all those green candles. Is this actually so far? Is it clear to everyone? Okay, fine. So I guess there is we have actually like 10 minutes, and if you have any questions, I'll just open up the floor for you. And since I'm recording, I'm just going to say thank you, and we'll see you once again in another webinar.